Etienne, a couple of other results out today. We had Nampak half-year results to end of March, revenue down 6.5%, but its fully diluted headline earnings a share up 15% and its dividend up by 39%. And that's a really nice rise in a dividend, isn't it?
Shareholders very happy with that kicker in the divvy, and I think it's a bit surprising, hence the share price kicking up 6%. I mean, basically these guys have been promising us a turnaround for the past 5 or 6 years and just haven't delivered, and all of a sudden in tough economic times they've come through, sold off some non-core assets and looked at working capital quite carefully. Operating margin is actually improving and money coming back to shareholders, and that's what we want to see.
Because operating profits up by 13% and its operating margin has risen from 7% to 8.5%. So obviously some nice cost cutting in there. Do you think it's sustainable, the changes we have seen at Nampak?
Stephen, that's hard to call, but I'd certainly like to see the trend improving. You know, on the input side, a lot of their commodities are priced in dollars. Typically, you know, you look on the metal packaging side and the plastic side, those commodities are priced in dollars. And obviously with a strong rand, Nampak benefiting directly as a result.
And of course, this is a company that's really geared to the economy, people buying more cold drinks because they have extra money, more things with packaging on it. And I think they said they were a bit affected by wet weather in December with people buying less cold drinks.
Yes.
But obviously as the economy starts to recover, people go out shopping a bit more, we should see Nampak benefiting from that.
Without a doubt. I mean, this is everything we consume nowadays is contained in some form of packaging, and Nampak being the biggest player in that sector stands to benefit directly.
Well, Richemount luxury goods shares down today on their results, and of course their year-end profit from continuing operations down 18%, 603 million euros. Looks like the market wasn't too impressed with that.
Yeah, I think the number is a bit surprising on the low side, and we could see that in the share price. It was down 3.5% in midday trading. I think it got pushed a bit in the auction, but the divvy being maintained to the best of my recollection. But at the end of the day, you know, people just didn't have money to spend on expensive watches and handbags. I see the Mont Blanc numbers came in quite strongly, so obviously, you know, instead of spending a lot of money on a watch, guys would trade down and rather buy Mont Blanc.
But again, another company that should do well in a recovering economy.
Yes, but having said that, the share has had quite a run, and I think the market had priced in quite a bit of growth, and these results were probably slightly disappointing.
Well, Standard Bank held its shareholders meeting today, and one of the key items on the agenda was the bonus payment for outgoing chairman Derek Cooper. That was 7.5 million rand. Shareholders, including the Public Investment Corporation, were against the bonus, but it went through by a narrow margin. Earlier, Mashudu Masutu spoke to CEO Jacko Marie.
We're delighted that shareholders supported us on this issue. 57% of the shareholders voted in favour, 40% voted against. So it was easily passed, and I think it is just a recognition of the fact that Derek Cooper has been an absolutely exceptional chairman. He's done extraordinary things for our company, and I think shareholders finally, despite all the media hype, recognised that and were happy to vote the payment through.
Although the prospects for banks are improving this year as the country recovers from recession, Jacko Marie remains cautious about prospects.
These results probably show that the turnaround for banks is going to be slow, and it's going to take a bit longer than perhaps some commentators have thought. You know, the economy hasn't turned, whether it's the South African economy or the global economy, it hasn't turned strongly. You know, we're definitely starting to look better, but I think it's going to be a slow process. So, of course, forecasting percentages is very hard, and as you saw, our increase was 7%, which is, you know, modest.
Etienne, you heard there 7% growth in headline earnings for the 4 months to April. So we are starting to see tentative signs of recovery in the banking sector. But of course, we know the Standard Bank this year is only really hoping to achieve the results that it got back in 2008. So it is going to be a long slog for banks.
Stephen, definitely the case, but what's interesting, we picked up anecdotally that their tie-up with ICB, the Chinese bank, is definitely opening up doors for them all over the show. And as a result, they are gaining market share in markets where they haven't had traction before, with high barrier to entries. As a result, margins are much wider in those markets, and Standard Bank stands to benefit from that. So in the banking sector, it's probably one of our top picks.
I mean, that really was a strategic shareholding that they sold to the Chinese bank, wasn't it?
Definitely. I mean, and that deal is now starting to bear dividends and quite handsomely.
Of course, we know some of the other banks, like Nedbank, perhaps one of the cheaper of the banking stocks, also has reasonable prospects and also talk of corporate activity around there. I mean, do you think that there's room for a good recovery in that share price?
Not as much as the Standard Bank price. Obviously, Nedbank being slightly smaller, and their cost-to-income ratio is not quite on par with that of a Standard Bank. So we still prefer the likes of Standard and First Rand in the sector, and not really that keen on a Nedbank at this stage. In terms of their profile of customer, they're obviously far more focused on the corporate market. So if corporates start to build up debt again, then Nedbank will benefit handsomely.
Etienne, market movements, we saw gains on Monday, a nice fall on Tuesday, recovery now, but we still see this volatility in our markets. Do you think the volatility is here to stay for the short term?
Stephen, I think the volatility is definitely here to stay. The reasons for the ups and downs are not fundamental, they are purely technical. Effectively, what we saw yesterday was, amongst other things, a shift in MSCI World indices. On the back of that, MTN kicking up quite nicely and getting pushed really, really hard, closing 110 Rand yesterday on huge volume. 21 million shares changing hands yesterday and only 7 today, and the stock's down. It was down at one stage about 3%. I think it closed 1% in the red. So I think volatility is going to be the name of the game going forward. And as I said about a month ago, sell in May and go away.
Are you going away?
I am, in fact, yes.
Etienne, we have to leave it there. Thanks very much for coming in today.
Thank you.